Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And it's a terrible Tuesday for the markets because now we are seeing that Nifty has given up that 25,400 odd levels itself. But yes, it's also given up 25,300 odd levels, so to say. It's trading at about 25,287 and nearly a 1%, over 1% cuts that is coming in for the Nifty 50. And of course, it's the 3-month low, and of course, the markets, the Nifty itself has been at the day's low level. So we are bringing to you just when the markets have extended the losses as of now. But yes, in just the 2 sessions, we have seen that Nifty has crumbled by about 400 points itself. Sensex has also seen a sharper decline of about 1,200 points in the past 2 sessions. So yesterday also we did see a larger fall for the markets. Today we are seeing even more deeper sell-off and a broad-based sell-off for the markets itself. But yes, so the broader end of the markets, they have sharply underperformed. If you look at the Nifty midcap index, that is showcasing a decline of about 2%. Small cap index also with about 2.5% cut itself. India VIX seeing a sharp uptick, 6% gains, and of course it's at 2-month highs itself. So yes, India VIX cues. So of course there's some nervousness which is prevalent in the markets. Remember, it is also the expiry day for the Nifty. So some unwinding of the contracts, derivatives contracts could be possible in today's trading session. But yes, let's take a look at how the sectoral picture has panned out for the markets. All of the sectoral indices have been reeling under the pressure as of now. If you look at Nifty FMCG, that is showcasing a decline of about 1%. Auto index, 2% decline. Nifty Realty, one of the top sectoral underperformers of the day with about 4.5% cut. Majority of the sectoral pockets and of course the individual stocks also from the realty space has hit fresh 52-week lows. So yes, all in all, metals, pharma, PSU banks, you name it, all of the sectoral indices have been treading with cuts. But it's, the advanced decline ratio also has sharply fallen as of now, 1:5. That's the advanced decline ratio. Just about, if you look at from the Nifty 50 point of view, how many stocks and gainers and losers I have been looking at. 46 stocks on the Nifty 50 have declined. 4 just have been in the green as of now. So yes, it definitely looks like a very turbulent day for the markets itself. And looks like a very sad and a gloomy picture given that India Inc. has been also delivering certain quarterly results from a stock level perspective. But yes, let's take a look at the gainers and losers from the Nifty 50 front. Tata Consumer has been towering the list. Like I was talking about, there's only 4 stocks that has advanced today from the Nifty 50 pack. Tata Consumer showcasing a gain of about 0.8%. HDFC Bank with about 0.3% gains. Dr. Reddy's ahead of its third quarter numbers is doing well, marginally up by about 0.1%. SBI also doing well with about marginal but flat but with a positive bias. Let's take a look at the losing end. What is not doing well, that's your Eternal ahead of its third quarter numbers. It's seeing a sharp decline of about 3.5%. Sun Pharma also showcasing a decline of about 3.5%. We did have some reports of non-binding offer for the US-based Oreganon, but nothing has been confirmed as of now. But yes, the stock has been remained sideways throughout the day. 3.5% cuts that's come in for this pharma giant. Adani Enterprises also showcasing a decline of about 3%. Jio Financial also 3% decline. Coal India, Bajaj Finance, both the Bajaj twins have also been seeing a cut of about 3% itself. So it's all in all, it looks like a negative setup for the market. But yes, just to understand how the last 30 minutes of the trade is like, and of course how you should be positioned, I'll quickly go across to my technical expert of the show. We have Osho Krishan of Angel One joining us. Osho, good afternoon. Nifty at 3-month low. It's broken and given up that 25,300 levels also in just the last couple of minutes. What lies next? I mean, is it the 200 DMA is going to be the final support for the Nifty?
For inviting me at the show. Well, yes, no doubt in today's trading session, the kind of sell-off that we are witnessing, it's kind of a terrible Tuesday, as you mentioned at the starting of the show, that it has been a terrible Tuesday for the market participants. But overall, on the technical front, if I have to quote, then as we are witnessing a kind of a consolidation breakdown in the benchmark index, the next possible target on the lower end is again 25,100 followed by 25,000. So that should be the next potential support zone, or on a shorter side, that can be seen as the target for a short-term perspective. So overall, the market sentiments have turned extremely bearish, and with the ongoing geopolitical escalations, there might be possibility of further correction in our market. So looking all the factors, macroeconomic factors, and even the geopolitical concerns, the sentiments remain on the bleaker side. So it's better to avoid any aggressive reversal or contra play in the market and do not try to catch the falling knife. Better to hold on for few more trading sessions and then wait for a stabilization. Then only we can see some kind of recovery or what comes next for our market. But as on technical developments, 25,100 to 25,000 is the potential target that one can expect in a very short term perspective.
Okay, all right. That's the level that we need to watch out for. But India wicks clearly indicating some stress in the markets. Osho, from sub 10 levels, we are now at 12 odd levels. How are you reading this in this situation?
Yes, no doubt. India VIX was quite subdued in the previous 2 to 3 months, but in especially in 2 weeks, there has been a decent surge in India VIX, which is showcasing a kind of a heightened volatility in the market, and the same can be seen in the market because in the last 3 weeks or four trading weeks, there has been a strong bearish setup that is being seen in the market, and India VIX inching towards the zone of 12.5. Now, any movement beyond the zone of 13.4 will be more critical for our market. So India VIX subsiding around the zone of 13 might see some kind of stabilization. If not, then it may picture a bad portray for the Indian equity markets. But for now, 13 should be the potential resistance for India VIX.
Okay, all right. That's the level that we need to watch out for. But yes, all the sectoral indices have succumbed to the selling pressure. Even metals and Nifty FMCG yesterday, which was holding the fort, has been seen a decline. But particularly for metals, last week it was great for the metals. This week, however, it started on a negative note. How are you placed here, Osho?
Overall, metal space is still looking very positive. Some of the counters are still looking positive on the counter, but overall, majority of the space, as we have seen a very drastic and vertical rally in the whole metal space, so some kind of cool off should be considered healthy. So some counters are still looking very positive. For example, Zinc is still looking very positive. The counter is showcasing a breakout in today's trading session. 3.5% kind of a gain is being seen in Zinc. So there could be a selective movement in metal space, but overall, these kind of correction in the whole space or whole index should be considered healthy, and one should try to look either to trail profits or exit from the current profit levels, and any dip towards the support levels can be seen as a buying opportunity in the whole space.
Okay, all right. That's the view for Nifty Metal. The structure still remains positive for this particular index. But yes, let's talk about the small cap index. That's the BSE small cap index. It has hit over 8-month low, and of course, over 200 stocks have also fallen to about fresh 52-week lows. And particularly, Nifty small cap index has seen a sharper decline of about 2.5% itself. Osho, how does the structure look like in the near term?
The whole small and mid cap space has seen a harder hitting, I would say, because mostly from the portfolio point of view, mid cap and small cap has been contributed to the portfolios. But looking at the recent correction, there has been technical breakdowns in majority of the small cap companies, and whole as the index also, Nifty small cap 250 is has given a breakdown below the zone of 16,000 and is now hovering around the zone of 15,600. So overall, it is on a bleaker note on the lower end. The bearish cap is placed around the zone of 15,100. So that might provide some kind of cushioning in the near period. But as of now, I'm expecting further correction in the whole space for the time being.
Okay, all right. That's the view from the broad end of the market. So some correction could be possible. But yes, let's also talk about the biggest casualty of today. That's your Nifty Realty Index. Several of the stocks like Lodha, Godrej Properties, Brigade Enterprises, they have hit fresh 52-week lows today. Right now, on an index level for the Nifty Realty, it's seen a decline of about 4.5%. Osho, can we see further fall ahead going from here on, and how are you placed here?
Overall, the whole reality space has seen a decisive correction. It has been into a corrective phase from past 2 weeks. There has been a breakdown on the technical levels, and from there onwards, we were expecting or anticipating that there might be some kind of further continued pressure in the whole space. But looking at the kind of a momentum that we are witnessing in the last 3 or 4 trading sessions, there has been a significant correction in majority of the heavyweights from the reality space. So I'm expecting that in the ongoing or short term period, there might be some kind of continued pressure But overall, now the index is at a very strong and historical support level. So at present levels, I won't advise to exit from the majority of the reality space names. But overall, there is some kind of room on the lower end, but it is nearing towards the support levels. So for index, the support is approximately around the zone of 780. If it breaches below 780, then it might be a concern. But overall, I'm expecting 780 should be providing some kind of cushion. So that should be kept as a final stop loss for the index.
Okay, all right. That's the view coming in for Nifty Realty Index. And once again, the Realty Index has been under selling pressure. But yes, let's talk about some of the individual movers of today. We'll first discuss about LTI Mindtree. The stock did see a severe fall today, 6% decline that's coming in for the counter, given that it reported a weak December quarter numbers also, which was impacted by one-time new labor codes. Now, brokerages in general also wasn't particularly enthusiastic about the performance. Nomura gave a neutral call. They are seeing a 8% potential downside from current levels. Morgan Stanley also believes that the margin pressure can be a near-term concern, which is why they've shared an equal weight rating. But yes, Osho, LTI Mindtree, sharp breakdown today. Can we see further fall?
In short term, the technical structure remains on the positive front, but overall, I'm expecting that with the kind of vertical momentum the counter was into, especially from the zone of 5,000 towards 6,400, there might be some kind of profit booking that can be seen in this space. Overall, 5,600 to 5,550 will be the technical targets on the lower end. If it tests the zone of 5,600, then one may look for buying opportunity. The broader structure remains on the positive front. Even the short-term structure is positive, but some kind of correction is was due in the counter. So I'm expecting that any correction towards 5,600 should be treated healthy, and that should be seen as an opportunity to reinvestment or re-enter in the counter.
Okay, all right. That's the view coming in for LTI Mindtree. More than nearly 7% decline that's come in for the counter. But yes, let's also discuss about Bajaj Electricals, because this particular stock did quite well in today's trading session. However, the stock has cooled off from its day's high levels, and right now it's just flat with about 0.3% gains. Now, why did the stock saw excitement in the initial part of the trading session was because the company announced its entry into the wires segment. Now, the company plans to foray into the wires as a new line business under its Lightning Solutions segment, and they have said that the move is aimed at expanding and diversifying their operations to drive a sustainable long-term growth. Osho, I mean, the stock did see a good breakout today. It has cooled off, given that the entire, we've seen the market breadth also quite weakening. But do you think the rally and of course the gains can be sustainable going ahead?
Technically, the counter is into a steep correction. There has been no respite or pullback that is being witnessed yet in the counter. So I'm expecting that if there will be any kind of sustainable movement beyond the zone of 480, then only one may look for buying opportunity. Till that time, better to stay sidelines. The technical structure is very bleak. No doubt the parameters are into extreme oversold terrain, but from here onwards, having a bullish view remains indecisive. So better to wait for some kind of pullback, and that to sustained pullback, then only one may look for buying opportunity in the counter.
Okay, all right. That's the view coming in for Bajaj Electricals. Right now, the stock has further slipped into the negative territory. But yes, another stock which is in focus, that's your Amber Enterprises. The stock was marginally higher, but right now it's seeing a decline of about 0.5%, given that the company said it has been allotted about 100 acres of land by the Yamuna Expressway Industrial Development. Now, they plan to set up a new manufacturing facility also in the new Jewar airport, and they believe that the combined investment of these two facilities would be around over 6,500 crore rupees. But yes, I mean, if you look at the stock, 0.5% decline, and the stock itself has been on a downward foot from the past 1 month. Osho, how does this setup look like? Can we see further fall ahead?
Technically, there is a kind of a divergence, bullish divergence in the counter, because the parameters are showcasing higher lows formation, but the prices are into a lower highs formation. So I'm expecting that there might be a kind of a stabilization around the zone of 5,800 to 5,700. So that should be the strong support levels for the counter. And from there onwards, I'm expecting a kind of a reversal. But at present, I won't be advising any kind of surging towards the counter at current levels. If there will be any further correction of nearly 200 to 250 points, then one may look for buying opportunity, but in a staggered manner.
Okay, all right. That's the view for Amber Enterprises. Let's also discuss about Dixon Technologies, 3% decline that's come in for the counter. But we did see an interesting brokerage note that came out this morning by Investec. Now, they have maintained a buy call in the counter, and they have said that given that the stock trades at about 40 times its FY28 estimated earnings compared with nearly 60x or 3 to 4 months ago, it factors in the near-term headwinds. And what the brokerage note expects is that the approvals for the company will be enough to come through over the next couple of months, and that would be able to support the revenue growth and margin visibility. Now, they also believe that it will continue to increase its value addition across the mobile IT hardware, and that is what has kept them quite bullish on the counter itself. But yes, Osho, Dixon Technology, 3% fall today. What's your take? Do you think the worst of the price downgrade is already over for Dixon Technologies?
Technically, the counter has corrected significantly because there has been a steep correction from the zone of 18,000 towards 10,000 and the technical parameters plunging towards the oversold terrain. So overall on technical setup, there is an initial signal of a kind of reversal, but I will rather wait for the decisive pullback or decisive respite in the stock. If there will be any movement towards the zone of 11,800, 12,000 kind of a zone, then one may look for buying opportunity. Till that time, better to stay sideways from the counter and wait for a further consolidation or stability in the counter around the same levels. If even if it stabilizes around 10,500 or 11,000 over a period of time, then also it will be a good opportunity to accumulate the counter.
Okay, all right. That's the view for Dixon Technologies, and definitely the stock is seeing a sharp fall today. But yes, another stock which is not doing well, that's your BHEL. BHEL is seeing a decline of about 5%, and the stock has been at its day's low level. But we did have some bearish calls that came in. Investec has reiterated its bearish stance to the counter. They see over 70% of potential downside, and its note they have maintained a sell rating on the counter with a price target of about 70 rupees. So yes, currently the stock is trading at about nearly 250 odd rupees, and they are seeing a potential downside of about 70% from the current levels. Now, what has kept them bearish is from the fact that they believe that the meeting execution timelines could be challenging for BHEL on the back of its impaired supply chain. So yes, that's what has kept them bearish, and even Kotak institutional equities have also given out a sell rating, and they've given out a target price of about 120 odd rupees. Osho, what's your take for BHEL from a technical angle?
On a technical perspective, the counter can see some kind of further correction. 230, 235 will be the potential short-term target in this space. If this counter plunges below 230 in the coming period, then it might be concerning on the technical fronts. But as of now, I'm expecting that further correction of another 10 odd points can see some kind of stabilization in the stock. So overall, I'm expecting another although there will be some kind of correction looking at the technical parameters, but there might be some kind of consolidation towards the zone of 230. So that can be seen as the final stop loss for the short-term investor, and even for aggressive traders, one can look for buying opportunity around those levels.
Okay, all right. Despite the worrisome note, technically the stock still remains sideways for the time being then. That's the key takeaway. But yes, let's move on and talk about Aditya Birla Fashion in retail. Given the stock did undergo a large transaction that took place, and as a result of which 6% decline, that's where the stock has been trading at. Now, we did see that about 4 crore rupees, 4 crore shares, which amounted to about 3.5% of the company's outstanding equity, changed hands in the large transaction. Now, the shares have changed hands at an average price of about 66 rupees per share, and the total transaction value was at about 289 crore rupees. But yes, Osho, coming to you for Aditya Birla and Fashion, the setup looks quite negative. How does the near term look like for you?
Technically, the counter is still into a very bleak note, although I'm expecting that with the kind of oversold parameters, some kind of pullback or some kind of relief rally might be seen in the coming period. So 62 being the historical support levels, I'm expecting that there onwards we can see some kind of pullback in the counter, although not very much aggressive in the target. The short-term pullback can provide a breather and opportunity to exit or lighten up positions for the long-term investors. 72 to 74 is the immediate hurdle. If it surpasses the zone of 74 on a decisive manner, then only we need to review the counter, else better to stay away, or those who are already holding position, 62 should be the final stop loss in the stock.
Okay, all right. That's the view for Aditya Birla Fashion. So some relief rally is where you can lighten your positions. That's the key takeaway. But yes, let's move on and talk about Ola Electric Mobility. Right now, the stock is seeing a sharp decline of about 9%. But with this, the stock has already extended the fall to about the 10th straight day. Now, the company had announced that its CFO, Harish Abhichandanani, has quit on due to certain personal reasons. They also announced that it has announced Deepak Rastogi as the new CFO at the company. So yes, that is why the stock has been seeing a little bit of a selling pressure. But yes, I mean, in the first three sessions of January, the Ola Electric as a stock had gained, but since then, the stock has been on a downward spiral. Osho, what's your take for Ola Electric? I mean, the structure has been quite negative.
Technically, the counter is very negative. There has been no decisive or sustainable rebound that was being seen. Overall, I was expecting that if it sustains above the zone of 42, 45 on a decisive manner, then there might be a kind of a movement that we would be having a bullish view. But overall, it was very short-lived, and another day the counter was into a deep correction. So I'm expecting that with the kind of technical structure, it's better to stay sideways from the counter. Again, if there will be any kind of decisive upsurge beyond the zone of 44, 45, then only one may look for buying opportunity. Else, till that time, better to avoid the counter on a short to even long-term perspective.
All right, that's the view coming in for Ola Electric. Something to avoid for them short to medium term perspective. But yes, let's move on and talk about Hindustan Zinc. The stock did hit a fresh 52-week high today, and right now also the stock is trading with a gain of about 3% itself on its strong December quarter numbers. So yes, according to Analyst, the company has registered a strong quarter, which was driven by better metal prices and improving volumes, and they also had some tight cost control. From a numbers perspective, net profit rose by about 46% on a Y-on-Y basis. Revenue up from operations increased by about 27% on a Y-on-Y basis. So yes, right now also the stock is seeing gains of about 3% in an otherwise subdued market. Osho, how do you read through this? And of course, any levels that we need to watch out from here?
Yeah, Henzing, I have a bullish view because the counter is obviously into a very strong terrain. The technical parameters are quite healthy for the counter, so I'm expecting that the momentum might persist. And even with today's momentum that has been backed by volume, I'm expecting that the momentum on the higher end should be continued. So 760, 755 is a kind of support level, so that should be a trailing stop loss in the counter. And on immediate basis, 716 to 720 is the target that I am expecting on a positional point of view.
Okay, all right. That's the view for Hindustan Zinc. But yes, if Hindustan Zinc has been doing well, let's talk about another stock which has been reeling under pressure. That's your Havells India, seeing a decline of about 7%. And the stock did slip after the third quarter's results missed the street estimates. So we also had brokerages reiterating their neutral rating on the counter. For instance, Motilal Oswal has given out a neutral call, saying that the Q3 results were below their estimates, given that the margins have remained under pressure in the wires and cable segment. But apart from Motilal, we had a bullish note that came in from Nomura because they believe that there could be some strong demand which could emerge from the infrastructure and cable capacity, and that would support the growth going forward. Osho, what's your take? Mixed brokerages note, but yes, the stock is seeing a sharp fall of about 7%. What's your take, and how does the near term look like?
With today's correction, now the counter has plunged towards the consolidation zone of 2022 to 2024. The counter was hovering within the zone of 1400 and 1250. So I'm expecting that once it again entered into a consolidation zone, so there might be a further or continued consolidation that might be seen in the counter. So although today it will be difficult to have any kind of short-term advice on the stock, but overall, if there will be any kind of stabilization in this counter around the same levels, then for a short to medium term perspective, it will be avoid. But from medium to long term perspective, it will be advisable to start accumulating the counter, but in a staggered manner. 1250 is a very strong support levels, and any breakthrough above 1400 can again provide momentum in the coming period. So from a longer term perspective, one start looking for buying opportunity.
Okay, all right. That's the view coming in for Havells. But yes, let's talk about PNB. That stock has been down after the initial spike, but the December quarter numbers did come in strong. The Q3 results did underscore that a familiar theme for the entire, PSU banking pack, some steady balance sheet repair, credit growth offset by pressure on the margins, and brokerages have broadly agreed that despite the core profitability which was muted, one-off gains in prudent provisioning has strengthened the bank's medium-term outlook. So yes, PNB right now with about a 2% decline that's coming in. Osho, what's your take on PNB and what levels should we watch here? Because initially PNB is seeing a decline of 2% and SBI was doing well, but right now it's seeing a decline of about nearly 0.3%.
Technical structure for PNB is still positive. It is in the formation of higher highs, higher lows, kind of a cycle in the daily time frame chart. So overall, 122 to 121 remains a strong support levels for the counter. If it breaches below 121, then there onwards we can see some kind of continued pressure towards the zone of 114 on a short-term perspective. So 121 should be advisable stop loss in the counter, and one should stay invested. The technical structure is still on a positive front, and I'm expecting that if there will be any kind of pullback in the whole overall market, then from here onwards, PNB can see some kind of breather towards the zone of 130 to 132 in a very short term perspective. So keeping 121 as a stop loss, the counter is a hold from short term point of view.
Okay, it's a hold from a short-term point of view for PNB then, despite today's sell-off. But yes, let's also talk about another stock in focus which has been buzzing in this weak market. That's your Deepak Nitrite, 4% gains that's coming in. We did see that the company said that its arm has commissioned its nitration and second hydrogenation plant in Gujarat. And the total capex which is incurred for this project stands to about 85 crore rupees as of the date of commissioning. But yes, Osho, I mean, the stock has bucked trend in this otherwise weak market, and it has also snapped its 7-day losing streak. So what lies next?
Technically, in the last month, the counter have seen a very strong movement from the current these levels only 1520, 1550 kind of zone only, and similar kind of pattern is being formed on the daily time frame chart. Even the technical parameters are quite supportive. So it will be advisable to either maybe start accumulating the counter, or aggressive traders can even look for buying opportunity at current levels, keeping 1520 as a stop loss. On the short term point of view, I'm expecting the counter can retest the zone of 1720 to 1730. If it surpasses the zone of 1730, then from there onwards, the overall structure will become very positive. But from a short term point of view, 1720, 1730 will be the target, and one can look for buying opportunity, keeping 1520 as a stop loss.
All right, 1520 as a stop loss and 1620 as our next resistance level for Deepak Nitrite. That's what we need to watch out for. All right, let's move on and talk about another stock in focus. That's your physics Wallah. I mean, the stock has seen a sharp fall today, 2% decline. But however, the stock has recovered from the day's low level. If you look at the stock after 11 o'clock, 11:30, the stock has seen a recovery of about nearly 6% as of now. But yes, we did see a block deal on the counter. Around 44 lakh shares have changed hands. And with the latest decline, the stock has been also trading below some of the key short-term moving averages. What's your take, Osho? I know it's a recently listed stock and there would be limited data, but what does the upcoming trend suggest for you?
I expect that if it breaches the zone of 126, then from there onwards we can expect some kind of positive traction coming back in the counter. But looking at the limited technical data, 126 seems to be very sturdy hurdle, and it might plunge even lower. Looking at the development that we have seen in last two trading sessions, so 126 will be a crucial zone, and any movement beyond 126 can provide some opportunity for the short-term buyers in the market.
Okay, all right. That's the view coming in for physics Wallah. But yes, the last rates which is coming on your screen, if you look at Nifty, seeing a decline of about over 1%, 360 points decline coming in for the benchmark index, and it has clearly given up that 25 to 50 odd levels as well. So yes, we did start of the day above 25,300 and 25,400 also. But we have given up both of these levels as of now. So yes, nearly 300 points decline coming in for this particular index. Sensex is also declined by about 1,000 points with about 1% downtick that is coming in for the Sensex benchmark itself. So yes, in the past two trading sessions, we have seen that Nifty has declined by about 2% itself. 460 points decline coming in for the benchmark index, and from a Sensex level also we have seen a sharper decline. Bank Nifty also seeing a decline of about 500 points. Nifty midcap index 1600 points decline, a 2.5% cut that is coming in for the Nifty midcap index also. So yes, the broader end of the markets remain quite subdued as of now. Both of the mid-cap and small-cap index has seen a share bit, severe bit of a cut. India VIX has jumped up, and the volatility has been on the rise, given that the markets have been a little nervous, given that there is a little bit of an uncertainty when it comes to the India Inc.'s third quarter results. And there is, of course, the geopolitical tensions where Trump has been announcing a tariff on the European nations in order for its bid to acquire Greenland. So yes, geopolitical tensions have been on the rise, and of course the expiry related swings are some of the factors also which is keeping the market subdued. So yes, apart from that, if you look at the sectoral picture, it has been negative through and through. If you look at Nifty Auto Index, 2% decline, Nifty FMCG 1.5% decline, Nifty Metal with about 2% decline, Pharma, PSU banks, Realty, the biggest casualty of the day, 5% decline that is coming in for the Nifty Realty Index also. So yes, the market texture has also weakened as of now. If you look at the Nifty 50 gainers and losers, 47 stocks have declined from the Nifty 50 front, and only 3 of the stocks have emerged in the green. If you look at the names, Tata Consumer, HDFC Bank and Dr. Reddy's, the only gainers on the Nifty 50 as of now. HDFC Bank, after yesterday we did see a little bit of a pullback on the counter, given that the investors have been cautious on the lines of its CD ratio. But today the stock is seeing a bit of a reprieve. 3%, nearly 0.3% gains coming in for the counter. Tata Consumer Products also doing well from the FMCG basket. But yes, what did not do well was your Bajaj Finance, 4% downtick that is came in for the counter. Eternal also ahead of its third quarter results. Tomorrow is when Eternal will be reporting its December quarter figures, and we'll be watching out how the numbers pan out. Adani Enterprises also with about 3.5% cut. Coal India once again seeing a decline of about 3%. Apollo Hospitals 3% decline. Asian Paints, Indigo, all of them remaining one of the top Nifty losers. But yes, let's talk more about Eternal, given that it will be reporting its December quarter figures tomorrow itself. And today, however, the stock has remained under pressure. Osho, for you, Eternal, how does the structure look like for the near term?
Technically, there was a kind of bounce that we were witnessing at the start of the week, but again, there has been a 3 consecutive days of correction in this counter, and this counter has plunged below the support zone of 275. So looking at the overall technical setup, the counter might see some kind of further correction towards the zone of 260, followed by 255 on a very short-term point of view. So if there will be any revival beyond the zone of 278 to 80, then only there will be a buying traction coming back in the counter. Else, till that time, one should stay sidelines and avoid the counter.
Okay, all right. That's the view coming in for Eternal also. All right, just one last question before I let you go, Osho. What are your top picks at this hour? We're into the thick of the earnings season, but of course, the markets have been under severe selling pressure. Anything that you're watching out for?
See, overall, to be very honest, it's a very difficult market. So any traction, any theme or any stock which is gaining traction for short-term perspective, we are witnessing a not follow buying traction coming back in the counter. But overall, I'm expecting that FMCG basket is looking positive to me, and there has been some kind of a strong support levels for majority of the counters. So HUL will be the preferred pick at current levels. HUL has closed around the zone of 2380. So at present levels, it is still looking positive. So one may look for accumulating HUL at current levels. 2340 should be the short-term stop loss for the counter. And on the higher end, 2440 should be the target that one can expect on a positional 2 to 3 days kind of a time frame.
Okay, all right. That's the view for you, and that is something that we need to watch out for. But with that, we have to let you go, Osho. Thank you so much for your time and joining us.
Thank you so much for the invitation. Thank you.
All right, let's see. I mean, this definitely both the indices have once again extended the losses to about the second consecutive day. Market has erased about 10 lakh crore rupees in investor wealth also. And if you look at from the past two trading session, Sensex has stumbled by about nearly 1400 points. So yes, nearly 1.5% cut that is coming in for the Sensex. But yes, from the Nifty 50 front, it is the 400 points decline that came in for the Nifty 50 index in just the two trading sessions. And of course, there have been certain key factors that has led to the decline in the markets. First, of course, the trade war concerns. It has resurfaced after renewed uncertainty over US tariff policies, which has weighed on the global risk appetite. And now we'll be watching out how the US markets behave after a day of its holiday. Given that the Wall Street futures have been pointing out to a subdued session for the markets itself. But yes, rising US Treasury yields and fears of escalation in trade tensions between the US and Europe has also triggered some of the sell-off in the global markets itself. So yes, apart from that, FII selling, persistent selling by the FIIs have also dragged the market sentiment. The India Inc.'s third quarter results have remained quite mixed. No surprises so far, which is why the markets have been searching for direction from here on. But yes, individual stock reaction remains under focus. We did have some more Q3 reports that came out today, and we discussed the stocks in general also. India Wix has also, however, added to the caution. It has rose by about 7% in today's trading session. So, of course, that definitely indicates that there is some bit of a heightened nervousness amongst the investors. But yes, one particular key event that we will be watching out today, that's your US Supreme Court decision on the Trump's tariffs. So investors will be watching out for whether or not, and of course, what the ruling pans out for the Trump era tariffs itself. But yes, to discuss more about the markets and where we are headed, let's quickly get on board with Aishvarya Dadheech, who is the founder and CIO of Fident Asset Management. Aishvarya, good afternoon. It's been a subdued sense for the markets today, and it's not just today, but we have fairly had a benign start to this year itself. Geopolitical tensions doesn't seem to ebb, and now we have fresh trade tensions between US and EU. So last year it was all about protecting capital for investors. Do you think this year also it's going to remain the same?
Yeah, good afternoon, everybody. We all expected this year to start after a very disastrous market in 2025 to be 2026 to be a better one, but life doesn't behave the way we want it to behave. And what we have seen is that not only the FI selling has increased in this last initial 20 days, but the geopolitical scenario globally has gone to a next level altogether. The whole paradigm between India, China, and US has now shifted to India, EU, and which is reflected in the risk of sentiment, where we are seeing gold and silver making everyday lifetime highs, and whereas some markets, specifically India, have seen continuous selling by FIs. But we have to also understand that apart from this geopolitical situation, which is affecting Indian market, there are certain other things also which are more India specific. Now, if you see in the last couple of days, our currency has also depreciated from almost 88 and a half, 89 to almost 91 as we speak today. That is also giving uneasiness to the FIs and overall macroeconomics environment there. And second is if you look at there's been some outcome related to Flipkart where we saw that court has said that they will have to amend those taxation things, and with budget around the corner, this is basically giving further, I would say, reason for global investors to look India in a different sense, and that possibly is also worsening the selling situation which is there. And last but not the least, what is really important was earning. The expectations for this quarter was muted. We are very early into this quarterly season, but there has been no big fireworks, right? Some of the banks and IT companies, including oil and gas like Reliance, have come out, but they are not really giving market reasons to hold on to that. Though we are very early to that, but I think that all combined together is leading to such kind of selling in the market. We have already seen almost close to more than 30,000 crore of selling by FIs in this initial 20 days of the market. And we believe that trend of the market, at least for the very short term, look a bit bearish.
Okay, okay, got it. Aishwarya, I mean, given amidst all of this trade and tariff row between US and European Union, do you think that the EU can be the next destination for India because it has been diversifying its exports to the non-US markets?
I definitely think so, and I think we are very close as been informed that we are very close to coming up with a new trade tariff agreement between EU, and I believe there could be no better time than this. But we have to understand that you cannot be a complete substitute for US for any of the country, including whether it is India or China. So this could be the small fillers which can help you to maintain your export data, but they can completely, substitute that. So I believe we have already done FTA with many other countries like New Zealand and others, and EU will also be a part of this whole exercise. But I think in Indian equity market, we'll only get comfort or get confidence once we have some more clarity on India-US trade tariff situation, especially after this whole Russian and Venezuela oil thing. So unlike that, if that happens, even if we go and sign India and a big European Union trade agreement, I don't think it will change sentimental in a big way. That is very, very clear with us on that front.
Okay, okay, that's quite an interesting take. But let's get back to earnings season. So far, the December quarter has turned out to be mixed, and markets seem to have already priced in that part of recovery. But what's missing is for the upgrades to kick in. So, I mean, what are you watching out for going ahead?
So we have some of those sectors which have come out. We have seen players like IT, some 4 or 5 IT companies have come out with the results, and some of those private banks and mid-sized bank, possibly some building material like Polycab and Havells have reported numbers. One thing is very clear that if you look at the numbers in detail and hear those management commentary, things are not that bad. Even in IT space, right from SCL Tech Mahindra, Infosys, we have seen earning guidance upgraded. We have seen that visibility, becoming more conducive on growth. We have also seen margin expansion happening across all of them. Even Wipro have done decent number, though they have guided a bit lower. So we are not seeing any worms around that, but market is in no mood to appreciate anything which is coming in line. Right. On the other hand, we have seen slight slowdown on numbers of Reliance, especially on retail side, and we saw Reliance has been under pressure since then. On banking side, there has been players like Federal and all who have reported, mid-sized bank have reported very decent number, but players like ICICI Bank or SDFC just reported numbers more or less in line with expectations, and markets are going very, I will say strong on that number. So I won't say numbers season has been bad so far, but we are not seeing any big fireworks coming from any one of them so far, and that is what market is getting more jittery about, because earnings growth is what I think that will be the only savior to the Indian equity market here. And if we see any slowdown or further earning cuts, which we didn't see in quarter two, if we see it happening in this quarter, then possibly we might see some more tough time for Indian market, at least for the quarter or so. So that is very, very, very crucial. We are very hopeful things will start showing up because the GST benefit and all other benefit will start accruing to those numbers. But let's see how this quarter goes through.
Okay, okay. Sure, you were talking about how HDFC and ICICI Bank maybe have not really appreciated the street and not really surprised the street, but Federal Bank had done quite well. So, I mean, how would you suggest investors to play out this theme? Because earlier, of course, heavyweights do matter for the markets to make an up move. But right now, if the mid and small size lenders, if they are doing well in the terms of growth perspective, would you suggest investors to be parking their money there?
So at Fident, we came out with our initial research very recently that we believe that SMID banks, which is small and medium-sized banks, is something which looks very, very attractive. And if we see the reason behind that is, the 4 or 5 parameters of banks, whether it is asset quality, of operating performances, names, when you look at their ROE and an ROA from 5 year compared to the last 5 year before, there has been a remarkable improvement in all of those parameters. But at the same time, if you look at the valuation catch-up can has just not happened. right? We have seen when Federal reported numbers, the stock has actually moved up 14-15% into session. That is the catch-up which is happening in SMID as a banking sector. And at the same time, we've also seen in the last 2 months, majority of the global funds and strategic investors have bought stake in majority of this small and medium-sized businesses, whether it is Manappuram or Federal or IDFC First or many of them. So it basically gives you a kind of a support system that there is a lacking for this particular segment, and this particular segment has shown remarkable performance on operating parameters over the last 4 or 5 years. The only thing left out is valuation catch up compared to other private banks. So that's why even at Fident we are very positive and going overweight on SMID as a banking per se, and we believe that is one place which is expected to do really well in this calendar year. Just to give you some numbers, majority of them are trading between, like Federal is trading at 1.2 time price to book. Many of them are between zero point 0.8 to 1.2 time price to book compared to the larger private banks or mid-sized banks, which are between 1.5 to almost 2 times or even more on that side, with now a very similar ROE trajectory and other asset quality parameters. We understand the only thing which is required for it, the valuation catch up to happen, is the growth part. For SMID, they have to grow faster. And if we see the revival happening in the credit growth, in the last December 14-15 days, we saw year-on-year growth was almost 14% plus. If that catch up with low interest rate in the coming times, SMID is a place to be, Lovisha.
Okay, all right. That's the view from the SMID banking pack. But, small caps in general, today also we are seeing that the BSE small cap index has hit an 8-month low, and over 200 stocks from the index has hit a fresh 52-week lows. I mean, if you go by the data, last year the small cap funds had hit record highs despite muted returns in terms of earnings growth. So, I mean, how do you see this trend to pan out, and what would you suggest investors to do? That despite, do you think that the worst of correction is also already behind, or the earnings is something that everybody should be waiting out for and, think about before investing into small cap funds?
So a small cap is a very interesting place. If you look at last year, small cap index was down roughly 6.5%. But if you go deeper, in the last year, small cap, which is with a market cap of say below 10,000 crore to say 5,000 crore, the deviation or the decline, if you see on equal weighted basis, was roughly around 24%. And if we go even below that, if I say hypothetically going from 5,000 to say 1,000 crore market cap companies on equal weighted basis, the decline was almost 28-29%. And if we go below 1,000, which we say possibly micro cap, the decline was around 31-32%. And if we add up the January data so far, I believe there would be another 3 to 4% decline on those equal time basis on small cap and micro cap. If we see on valuation, what has actually happened, if we started December 24, the premium which majority of the small cap was trading at compared to large cap was stupidly very high. It was almost 70-80%, which has actually come down to around 35 to 40%, which in line with the long-term average. But still, small cap are not very cheap. And second most important thing is if you look at that the in the earning growth trajectory, if you look at midcap has actually done phenomenally well over the last 4 or 5 quarters, but the earning growth trajectory of small cap in the last 4 or 5 quarters has been very patchy, and it is basically in low single digit compared to mid twins of mid caps there. Now, if you look at the macro situation, looking at the growth and the government initiative and the RBI initiative and the lower interest rate, it all bode very well for small cap. And we also believe that after a very bad year for small cap in 25 and though the start of 26, possibly year will be a year of revival for small and micro cap. But it will only happen once we start seeing earning started contributing meaningfully, which will obviously play out in this 2 quarter and that's one of the next financial year. So one has to be very watchful into buying small cap companies, businesses which has a very strong moat around them, unlevered companies, and where we're seeing there's a growth of around 20-25% visible over the next 2 years. Those companies, I believe many of them are now trading at between 15 to 20 time PE compared to 35 to 40 time PE 1.5 year back, is now becoming very interesting from investment perspective. So investors has to be very watchful about what kind of growth and valuation they are buying in small cap. And last but not the least, we might see a couple of months of volatility before things really settle through, once we have more visibility on the earnings in the small cap space.
Okay, okay. Aishwarya, any sectors from the small cap space which looks comfortable from the valuation front, or is it completely going to be stock specific?
No, so if we like when we our team is spending a lot of time and meeting a lot of this management. So as I said, many of the small cap companies were available between 30 to 35 or even at 40 time P 1 year forward, irrespective of whichever sectors. Now all are trading between even 15 to 20 time PE in that space. That includes of whether so we are talk about fabric milling materials, if you look at chemical companies or CDMO companies, or even many of those Smith is not the way to look at it on PE, but valuation has become very attractive. But we have to really understand what that if we are trying to buy these companies in that segment at around 20 time P or 17, 18 time P, the growth has to be there at least 20%. And that why one has to be very sure that we have to be in sector where you're able to turn around these kind of growth to really justify those earnings before market sentiments picks up. If your growth dwindles for any other reason, whether it is geopolitical or any other macro reason, possibly this 20 time P valuation come down to 12, 13 or 15 time P valuation historically that we have seen. So one has to be very sure on which sectors one should look at. Couple of sectors which we are very comfortable is BFSI. I think with whatever government has done on tax cut and GST cut, consumer sentiment looks pretty good. There are a lot of the small cap companies in the consumer that are pretty convincing on that parameter, and say some companies on the pharma space or auto inc is one area which we believe should be able to maintain higher growth. So there are a lot of good companies in small and mid cap size in the auto ancillaries which are trading between 15 18 time P. That makes a good investment cases.
Okay, got it. Aishwarya, any sectors you want to point out which you believe could be at the risk of the earnings downgrades?
If we really look at the couple of sectors which we believe can see a lot of volatility is pharmaceuticals and chemicals also. So it's going to be very difficult to extrapolate their earnings about how they will play out, given such geopolitical scenario. Second, obviously, is any companies which have a higher export related activities, whether it is auto or whether it is any of the export X of IT, which we believe investors has to be watchful about their ability to play out on earnings side. But overall, if you see the larger part, whether it is BFSI, whether it is IT, whether it is consumer, we should be comfortable there. Even industrial and capital goods have its shares of up and down, but we believe the whatever momentum of government capex is there, should be able to maintain that kind of growth for majority of these companies. We have been categorically stayed away from renewables and railways and place like that, because we believe we have very limited ability to understand your ability to forecast those earning, and they might have higher probability of missing out on earning on that side. So this will be the couple of sectors which we believe can surprise negatively on the earning side.
Okay, okay, got it. But I mean, what about the realty space? I mean, we have some data saying that it's been a worst start, a third worst start for this year. I mean, in last year also they in January itself they declined by about 12%, and in 2016 is when they also saw a decline of about 11%. How do you see the realty space? Today also it was one of the biggest sectoral underperformers. What would you suggest investors to do here?
So if you look at in calendar 25, I believe Realty was the worst performing index, right? And I believe that, guys, you said that continues the trend even in this calendar year so far, though it's very early. So we are very negative on the space on real estate. We didn't invest in anything in that space even when we started. The reason that is in spite of, we are seeing lower interest rate environment, which is very conducive for real estate players. But if you see the way the pricing has inched up over the last 4 5 quarters in the key markets of the top 10 cities in India, And at the same time, when we see the inventory piling up, though there is a huge consolidation which has happened in the industry, even in a city like Bombay, where there used to be like 10 large players which used to own 70-80% of the market share, it has gone down to between three players, which is between almost like 55% market share today. So in spite of this consolidation, the inventory level and pricing, we believe, are creating very difficult scenario, on that side. So we believe pricing possibly will remain a plateau. That will be the best kind of a scenario. And then inventory system will create further pressure on the balance sheet of majority of these companies. So we believe it's going to be again a tough year in spite of lower interest rate, and we will particularly stay away. And that not only include real estate, we are also not very bullish on building material as a space. So I think the whole pie is something which we believe possibly will remain under pressure for more time in this calendar year.
Okay, got it. But yes, I mean, just one last question before I let you go, Aishwarya. I mean, if you look at the gold and silver prices, they continue to hit record highs amidst all of this geopolitical tensions. Do you expect this trend to remain the same, like investors would prefer this as a hedge, or is there some speculative excess already built into these precious metals?
No, definitely. I believe gold and silver are not behaving like commodities. They are now behaving more like currencies. And I believe that everything, if you see the kind of momentum which has happened in gold and silver, is more to do with the way central banks are behaving. It has to do everything with the way yield has moved in the last 6 months, and obviously the dollar weakness. You all understand that whenever dollar weakens, commodities do well. And this time around, with the dollar weakening, there is a clear-cut geopolitical risk which is developing from a majority of the non-US led banks who believes that if the dollar things can weaken further, it's better to stay into metals, especially in gold. So it's like lower confidence on fiat currencies is what which is moving the money into gold. And then we saw, that chain reaction pulls up and the kind of movement we have seen in gold. And specifically in silver, we have always seen that in a bull market, silver outperforms gold because silver has both industrial as well as store value funda on that side. So we expect that whatever the movement has happened is very sharp. It is very difficult to predict how geopolitically things will turn around, and we will definitely see that things playing. If you see the geopolitical scenario continues to be or more problematic, with the further rallying, gold and silver can't be ruled out. Silver, obviously, because it has this finding in AI and chips and renewables and on whatnot, have a better case because of supply side issues also. But gold is definitely behaving a bit erratic in our understanding. So if we see, I think it has to do everything with dollar geopoliticals and how the supply side things is matched through. But we have to be very cognizant of the fact that whenever these kind of sharp movements comes, irrespective of any asset class, the reversal is also very sharp. So if something happens on geopolitical side, if there is some settlement or things improves over the next 2 3 months, the reversal could also be very, very sharp. But having said that, this is, I would say, a bullish trend which has been picking up. I won't be surprised to see it going further, because of all the things which I mentioned. But I will not also be surprised to see a reversal anytime soon, especially in silver with the way it has moved, at least in the last 1 month.
Okay, all right. That is something that we need to watch out for. All right, with that note, we have to let you go, Aishwarya, but thank you so much for connecting with us.
Thank you. Thank you so much.
Thank you. All right, that's all we have for this edition of Closing Bell. Remember that, the markets have been on a negative trajectory. Nifty has fallen to one of its lowest levels that we have seen in the last 3 months. 25,200, that is where we are at. And of course, we'll be watching out whether or not it sustains above that level. And 25,100 would be the next support zone that would lie for the Nifty 50 index. Tonight, we'll be watching out whether or not Supreme Court will rule out on the legality of President Donald Trump's tariffs. And of course, we'll be watching out more data. And of course, the stock-specific reaction will be continuing from the December quarter results front. So yes, so we'll be once again back tomorrow with markets. But in the meantime, do stay tuned to Moneycontrol for all the news updates and market insights.